So I would like to introduce Andrea Franklin Davis. She is a retired senior team coordinator from the IRS. She retired in 2016. Let me get back in the camera. With 37 years of experience and service. Currently, she has a small tax practice in St. Louis and also volunteers as a tax preparer for VITA, okay,
Ida.
which is a volunteer income tax assistance. Andrea is also a motivator interviewer and Operation Change in the St. Louis area, which is a not-for-profit organization that educates and empowers women to make changes and to accomplish healthier lifestyles. So welcome, Andrea, and I'm going to, like I said, do my best to get this PowerPoint on screen and we will get started.
Happy New Year, everybody, and glad to be back. I looked last year. I think I did the presentation early in March, and tax season was starting. So I'm glad you got me earlier this time because at the very first slide it says tax season begins Monday, January 24th, and the return due date is Monday, April 2023. This is the 22 tax year filing requirements for federal tax return. And if you're single, if you under 65, then your gross income must be $12,950. If you 65 and older, it's $14,700. On the married filing joint, if it's both spouses that are under 65, you'll see the income requirement is $25,900. If one spouse is 65 and the other is not, it's $27,300. And if both spouses are 65 and older, the filing requirement income is $28,700. If you are filing separate at any age, $5. Head of household, if you under 65, it's $19,400. If you're 65 and older, it's $21,150. And they changed qualifying widower to qualifying status surviving spouse. So it's basically the same, but they just changed the wording. So if you under 65, the income requirements is $25,900. And if you're 65 and older, it's $27,300. And you can go to the next slide. All right. Who should file? I thought in this slide, if you're a taxpayer, if you're not required to file a federal return, then you should file if any of the following situations below apply. One, if you had income tax withheld from your pay, pension, Social Security, other income, you must file, or you should file to get that money back. You made estimated tax payments for the year or had any of your overpayment of the last year's estimated tax applied to the current year, which is 22, you should file. If you qualify for earned income credit, if you qualify for a refundable American Opportunity Credit, and that's part of the educational credits. If you qualify for the premium tax credit, and what that is, if any of you all have your insurance under the Obamacare or the Affordable Care Act, you must file a tax return. If you qualify for additional child tax credit, if you receive a 1099-B, which is a brokerage statement such as Edward Jones or any of the financial services, and the gross proceeds plus other come exceeds the filing limits, such as, again, I'll go back to the filing requirements. If you're single under 65, it's $12,950. Married filing jointly, if you just example under 65, $25,900. If you got proceeds from that, then you should file. If you receive a 1099-S proceeds from a real estate transaction, generally if you are selling a home, you must file. if you are required to file a state tax return. And finally, if you file a zero return, a zero AGI return, adjusted gross income, you want to file because you want to prevent identity theft, to claim a state credit, and in this case, in the state of Missouri, Missouri property credit, or for other assistance, then you should file a tax return. You can go to slide 4. These are rules for claiming a dependent. In other words, for those who wants to get the child tax credit. And most of you probably know that test to be a qualifying child. It must be your son, daughter, as it says, foster child, brother, sister, half brother, half sister, step brother, step sister, or any descendant of any of them. And again, adopted child is always treated as your child. Adopted child includes the child who was lawfully placed in your legal adoption. 2, I'm gonna go to 2 on just for a test to be qualifying child. The child must be under age 19 at the end of the year. Okay, so in other words, if he's 18, you can claim to get the child tax credit. It also says younger than you or your spouse is filing jointly, under age 24 at the end of the year, if the child's a full-time student, and younger than you or your spouse is filing jointly, or any age if permanently and totally disabled. And 3, the child must have lived with you for more than half the year. Now, if you don't make any of those qualifications, then there are tests to be a qualifying relative. And with that, meaning that if the child is under 19 or over 19 or over 24, I should say, or if they're 19 and not in school, you will get and I'm kind of going ahead, but you would get a credit of $500. So I'm gonna go on and read. The person can't be your qualifying child or the qualifying child of another taxpayer. A child isn't qualifying child of any other taxpayer if that child's parent or any other person from whom that child is defined as a qualifying child isn't required to file income tax return or files an income tax return to get a refund or income tax. The person either must be related to you in one of the rules listed under relatives. And I won't say C table, but basically that person must be a sister, pretty much we said daughter, brother, half brother, any descendant of them. And 3, the person's gross income, and this is important, and it went up from last year, was $4,300. That person's gross income must be less than $4,300. And gross income, as it says, means all incomes the person received in the form of money, goods, property, or services that is exempt for tax. Don't include Social Security benefits unless the person is married, filing separate, and live with their spouse at any time during the tax year, or if one half the Social Security benefits plus other income and tax exempt interest is more than $25,000. You can go to the next slide. 4, the child must, I'm gonna go back to that. You must be a qualifying relative if you provide more than the other's total support in 1 year. And then I forgot to mention, because of the test to be the qualifying child, the child, of course, must not have provided over half of his own support. The child isn't filing a joint return for the year unless that joint return is filed to claim a refund, income tax withheld, or estimated tax paid. And 6, if the child meets the rules to be a qualifying child or more than one person, you must be the person entitled to claim the child. We're going to kind of address this a little later on. I thought to include this 1099-K, because a lot of people do pay or send money through online platforms such as PayPal, Venmo, and I think some others I can't think of right now, but pretty much I think it says Etsy down there to name a few. The IRS kind of delayed they passed a rule in 2021 indicating that they were going to issue the 1099K for anybody that had transactions of $600. Okay. And as I said earlier, in 21, a law was passed dropping the requirements for 2022 from $20,000 and 200 transactions to 600. They delayed the rule for December 22nd, that they were not going to apply these rules to the 22 return. So kind of give you an alert for 2023. If you do use those platforms such as PayPal and Cash App for this year, for 2023, and if it's not for business or services, and for example, if you are sending money to your child to pay rent, or somebody is, sending money to you because you picked up a package or purchased a package for them that you're not in the business. And if you got more than $600 of those, they may send you, the third party may send you a 1099K. So one of the things that you might consider, if this is not taxable income, it's not a business, and if they do send you a 1099K, if you have such transactions, as I mentioned earlier, that's over $600, you might want to contact them and say that this was not for business and services so they can correct them. Now, at this point, I'm going to kind of open it up. If you have any questions, please ask, because I know quite a few people use Cash App and PayPal. So if you have any questions right now.
My question is, I do send money to my kids through like Zelle or maybe Venmo, and I put in a comment like gas, or like my son does physical therapy, so I put stuff like that. Does that help? Does it, having those comments like that? Because
Well, with Zelle, and I do use Zelle, they didn't use Zelle for some reason, because generally Zelle is not, and I don't know if people, and I think they do, but generally it's not used for like business and services. Now, when you are sending things like you just suggested for physical therapy or gas, that should not be taxable. But if those, and I'm talking about for 2023, and if those transactions are greater than $600 in that year and they were to send you a 1099K, you might want to contact them and say, these are not taxable. Now, if that doesn't work, I would apply, have a statement attached to your tax return saying why those items are not taxable, and that you're not in any business or service industry.
Could our tax preparer, would they know that, or would they be
Yes, they will know that. They should know that.
And then, so could, instead of me or, the family or the person contacting the IRS, because that's kind of scary.
Not the IRS, the platform,
like Venmo.
Venmo, right?
Okay,
right.
Gotcha.
That's who you contact, because if they want to, if you say that, they should issue you delete it. Okay. But if that does not work, your preparer should ask you these questions about the 1099K. What were they for? Were they for a business or a service? If not, what are they? Then they should be able to handle that. Because a lot of times, if you get the 1099K, and if you can get it, if they get it to you before, they're supposed to get it to you by January 31st. And if you contact them and say that, this is not correct, then if you don't hear from them, that's when you communicate that with your tax preparer.
Gotcha. Thank you so much. I appreciate that.
And again, I put this in there because I know a lot of people utilize PayPal, Venmo, Cash App. These are some changes for 22. And if any of you all are educators for elementary and secondary schools, the deduction has been increased to $300 from $250. Big increase, but it is an increase. Another change is last year, or the last 2 years, if you could not itemize, you could have received charitable contributions for $300 if you were single or had a household, or $600 if you joined. And that was for 2021. They eliminated that. So if you have any cash contributions, you must itemize. And again, a big thing, no stimulus payments for 2022. So there will be no recovery rebate credit in 2022. Also, private mortgage or PMI premiums are no longer deductible in 2022. Okay. The child tax credit, the qualifying children must be under 17. And a lot of people get confused. So if your child is 16, that'll be the last year that you can get your child tax credit up to $2,000. Earned income tax credit, the changes from last year, to get the credit with no qualifying child, the taxpayer need to be 25, but under the age of 65. Last year, they made a new rule, which really helped seniors. All right, when I say seniors 65 and older, they could have received the earned income credit if they had made, I believe I think $15,000. They eliminated that last year. And I recall when I was preparing tax returns for people that were taxpayers that were over 65, and if they had income within that threshold, they were happy to get the earned income tax credit. Well, they're not going to get it this year. Okay. And also they did change the income gap. They lowered it for single people with no children. The income tax has been lowered to $16,480. And for people married with kids, $22,610. You can go to the next slide. Okay, this is the standard deduction amounts. These are people who are able to itemize, and if you under 65, these are the amounts. Single and married filing separate is $12,950. Married filing joint or qualifying surviving spouse with dependent child is $25,900, and head of household is $19,400. You can go to the next slide. Okay, this is the chart for people that are born before January 2nd, 1958. And who are blind. Now, basically what we're saying, if you're 65, okay, at end of 2022, you'll get extra if you're single, and if you were born before January 2nd, you get $14,700. If you are blind, you get $16,450. That would be your standard deduction. If married filing jointly and so on, if you are born before January 21st, it's $27,300. If the spouse was born before January 2nd, 1958, you're going to get $30,100. Now, if you are blind and one spouse is under 65, you get I think so many checks. I think 30,100. So I mean, this is the chart. If you are born for the standard deduction before January 2nd, 1958, and who are blind. And if you can share these slides, Yvette, if you like, if anybody wanna. so they can have a reference to it. You can go to the next slide.
Okay, thank you so much for letting us share the slides.
Yeah. Okay. Now, I had said I was going to come back to this. I mentioned this in regards to, and this is the old form because we don't call them exemptions, but they use the exemptions now. They use exemptions and they just didn't change the form. But basically, in order to claim a dependent, if a custodial parent wants to release or revoke or release a claim to claim a dependent, this is the form you would use. Or if you want to revoke a previous release of claim. Okay. Well, like I said, it was not a lot of changes from the previous year on the federal income tax, other than most people probably will not see as large a refund. For those people who want to file income tax returns for the state of Missouri, it's already started if you wanted to file it. And basically for those who will file are generally people who file the property tax credit. And this is and you can do this yourself. And apparently they have a email address in which you can do it on. And the due dates for the Missouri individual income and property tax returns are due April 18th, 2023. And then for 2019, the statute of limitation on refunds will be due April 18th, 2023. In other words, if you did not file your taxes for 2019 time and you're doing it for this year, you must have it filed by April 18th, 2023. Now this is, and maybe you might know this or not, I'm not sure, but this is a new law and for the state of Missouri. And beginning with this tax year, 2022, a taxpayer can claim a deduction for eligible expenses directly incurred for providing care as a foster parent to one or more children in Missouri. For the filing status is a married filing, combined, qualifying, widow, single, or head of household, the maximum deduction is $5,000. For the filing status of married filing separate, the maximum deduction is half, which is $2,500. To qualify for the full deduction amount, the taxpayer must provide foster care for at least 6 months, 183 days. The days do not have to be consecutive days, but the total days must add up to at least 183 days. If less than 183 days, the amount of the deduction will be reduced on a pro rata basis. An affidavit form 5870 must be provided to verify the taxpayer is a foster parent. Form 5870 is also used to calculate the deduction amount. You can go to the next slide, and it's going to be the final. For those who can, and this is not a very good slide, but for those who can qualify for the Missouri tax credit, generally it's for people that are renting or own their homes. If you are single, first of all, you have to be 65 years old or disabled. Okay. And your total household income, if you're single, is $27,500. If you are married filing a joint return, the total household income is $29,500 or less. And if you are 100% service-connected disabled veteran, you do not have to include your veteran assistance payments. Now, if you own or occupied your home during the entire year, and again, you have to be 65 and older or disabled. If you're single, your total household income is $30,000 or less. If you filing a combined return, your total household income is $34,000 or less. And again, if you are 100% service-connected disabled veteran, you do not have to include those VA payments. So the amount you can get, the total amount, I guess the highest amount you can get if you are renting is $750. And if you are homeowner, you get $1,100, and the actual credit is based on amount paid, and paid if you rent, and your real estate tax if you own your home, and it's based on your total household income, whether it's taxable or non-taxable. So this is pretty much it. I like at this point in time, open up the presentation for any questions.
Any questions out there? That was a lot of information.
It's a lot of information. It's, so you can look at the, I don't mind you sharing the slides. All this information is coming from IRS website and VITA information. But I think these were the relevant points to make. Like I indicated, it's not a lot of changes, but there are some changes compared to last year, such as you're not going to get the economic income tax payments. Some of the items, the charitable contributions, no longer, you're going to get a deduction if you don't itemize. And then, you can see as far as what the child tax credit in what you get, and then earned income tax credit.
Is there anything that you wish more families knew? If like solve one or two things, what would it be that people would understand better?
With regard, as far as you said, families,
I'm thinking parents, as far as taxes and this whole process every year.
Well, one of the things is, if you're not the custodial parent, I mentioned about that revelation release. That's important. If you're in that process of becoming a custodial parent and you know who the parent is, I would recommend you have them sign that. That's important. One other thing I mentioned, and I forgot to put that in there, and I did mention this from last year. I would suggest you always get identity theft pin. Okay, just in case, if you are a custodial parent or somebody, and I've been through some situations where people have stolen the dependent Social Security number and claimed them to get the child tax credit. I would suggest getting an identity theft pin for everybody.
Wow, I can see how that could easily happen.
Yeah.
And people wouldn't think about that.
Yeah, so I'm sharing that, and not, and I forgot, I apologize not putting in there, but that's important.
How would somebody do that, Andrea? How would somebody?
You go to the IRS website, irs.gov, and you would type in search identity theft pin, and it will outline how you should do that. For all, and I recommend you to do that, because I think that's important. Because another problem that we faced, and when I say we, especially doing VITA, we found that people claim the kids before the custodial parent, the actual person who's eligible to claim the child. And what happens is that person, we have to do an amended return, a paper return, which will take time, but eventually it will work itself out. But any type, and if you have to file a paper return, I can tell you this, it will take a while for it to be processing. And they still processing 2021 returns that are filed with paper.
That was going to be one of my questions, because that happens a lot with the families that we work with, is that non-custodial family members may claim the kiddos on their tax returns. So, and it just seems, we all kind of just seem stuck, but it is a possibility that it can be reversed. Is that what I'm hearing?
Yes, especially if they the custodial parent and they have all the paperwork to say that. But you won't be able to electronically file the return. I'll give you an example. If the custodial parent filed a return in March, if it rejects electronically because somebody claimed a dependent, then that would be a marker to say, all right, somebody claimed the child. And she said, no, I'm entitled to that child. So we would have to file a paper return. Now, if you can go on and get that theft pin right now, that will prevent that.
So what percentage would you say, Andrea, of when that happens, and I know it happens often, what percentage rate would you give to actually people getting the correct people being able to end up filing or getting that tax credit?
I guess it's not a high percentage rate, but any percentage is 200. I probably saw about 10 people that it occurred, just me, my experience only, and that's just me. And I would say out of the returns, I would say about 10%. But if you do the identity theft pin, and since this is ParentLink, this is something that would suggest you all probably send out to your members as soon as possible, even before, because you can always get identity theft pin before tax season. I would recommend you do that, but you can do it. It's never too late. And as I said, go to the irs.gov website and type in the search box identity theft pin, and it will get you to where you need to, what you need to do to file for that. And it's not that difficult, because I think you can do it online.
That's really good information. I didn't know about that. So,
and again, I thought I'd bring this up because I said, I didn't include it in my presentation, but I do know it occurs.
When you say identity theft pin, what are you referring to? Is that the is that the 4 numbers? It's like a PIN number.
It's a PIN number
assigned to your name or whatever.
I want to say it's 6 numbers.
6.
It might be 6.
I've seen.
You know what? It might be 4. It's 4 or 6. It's assigned to you. They will send it to you. It'll be assigned to your spouse if you had your spouse do it, and your dependents. And IRS send that to you. Now you cannot have your return will not be processed unless you put that number on there. So if you've been assigned an identity theft pin and forget to tell your preparer, your return will reject. So it's important to have that. If you have one assigned, it's important to have it. Okay, or else if it rejects, if you want to file your tax return electronically, it will reject. Now, it possibly won't reject if you do a paper return, and it will take a while. So hopefully I answered your question.
Yes, that was good
You will be
information.
getting, once you put that in process, you should be getting a PIN. And if you forgot your PIN, you go back to irs.gov, and they have like I said, type in identity theft pin. It'll have like Q&As of what different events, what could happen and what you should do.
Okay, that is really good information that, like, everybody was saying that we should know. It's simple, but still it would be really valuable down the road when, you come up against something. So
Right.
Thank you. I just thought
And you know what? I want to add also, in addition to the identity theft pin, it's not just for, dependents being taken elsewhere. If somebody stole your identity, that's another reason why you have one.
So it's almost like the PIN numbers you get if you apply for financial aid. Yeah, you always have to use that 4-digit number in order to access your own information even. So that's really nice. I'm glad that's
done that. And
nice.
Again, that's in case, because I even think, again, in addition to the release, that Form 8332 I mentioned, it's also good to have as well, to get them to sign that, because that's even further support that they release the dependent to, let's say, a non-custodial parent, and that can happen as well. But I'll recommend anytime you have dependents and that situation could possibly arise, get an identity theft pin.
Well, Andrea, thank you so much.